Man, John, the phones have been blowing up this week. What are you getting calls on?
Old crop, new crop, what to do. Also, plenty on the cattle. And what is this market and where is it headed? And then, of course, today was the AI DeepSeek. And what does this mean to anything else? Actually, that's a very confusing topic, but that was the news today for sure. But I would say dominating the list would be what to do with old crop corn and soybeans, more so on the corn, and definitely new crop. That's the topic that everybody wants to talk about, so we will.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we are almost a full month into the year, and we still have some old crop, new crop questions. What are you telling guys? What are you looking at? What are you looking for?
First of all, when you look at the markets, you can see the March-May spread in corn and soybeans, which I've been talking about quite a bit. What I mean there, the carry between March minus May, and that's the difference. It's at 10 cents for corn, as it was, last time I looked it was, and then beans were at negative 12, which is the lowest in a decade. So when you hear what I'm hearing on the phones from a lot of different directions, basis matches with what the spreads say. There's a lot of old crop beans and corn in the pipeline, a lot. Now, there's two differing thoughts on the corn. If the USA's numbers are to be to believe that 1.5 billion, we should start seeing tightness after March. Actually, we should already see the spreads moving. This is not a healthy looking market, but there's a lot of guys with the opinion that we are going to see this tightness. So where will this happen? Is it going to happen in futures, basis, spreads? Where is all this corn action going to happen? It generally peaks out in May. A lot of guys think that the July gets to be well over the price of December. That's not always the case. Generally, May is the leader there. So the bins have been getting cleared out for quite some time since harvest, really. You guys have been moving it at a nice, easy pace. And the market has been moving up at a nice, easy pace with that in the corn market. I think it's accelerated a lot after this last week, but you're hearing these calls about how ethanol plants are taking it, or the river is 2 or 4 hour wait to dump, and they're not even taking anything that isn't contracted right now. These are not the stories you want to hear in a demand-led bull market, that the pipelines are too full in front. So we're going to want to see that changing really quick. And then where I'm at on old crop is, what are you going to do with that? Are you going to move it on this nice price rally? And what people don't like is the basis widening out, so the price is appreciated and then the basis is widened out. They don't feel like they're participating in this rally. So right now, what I'm telling guys is you have to decide what you want to do as a farmer or producer. Do you want to gamble into that May, possible June, July time period when you have tariffs, you have the AI in the stock market. If that were to fall, that the funds could pull money out of the grains, and then you have the funds at near record longs, or getting there, especially for corn. So the market's fairly vulnerable up here. So if you're, in my mind, there's three things you can do. Nothing, just sit on what you have. You can buy a put on it to see how all the politics and everything else plays out. And then you're giving up some more of the bottom line. Or you can just hold tight and just think that it's going to get tight into spring, summer, and then make your move then. So you just really have to decide what you want to do. All of them are kind of difficult choices because we don't have any of the answers that we need, especially on this February 1st deadline for the tariffs. The market is trading that they're really not taking it serious, and they think that there's probably trade deals in the background going on. The Colombia thing's already it shows you how quick it can flare up, and I think the grains had a big problem with that today, knowing they kind of remembered how this worked now with Trump in there. Things can change overnight. So, some of these extra longs, maybe nervous longs, got shooken out today. They just don't want to sit through all this news. So you got a really messy market, and there's not a lot of good answers because we don't have any of the information yet that we need. If it was me and I had a large farm and I was a producer sitting on some bushels, I would probably, look at some sort of put ownership, on through the February 1st timeline. And then if I did need it, get rid of it. But I'm also leaning on and doing nothing and just seeing what happens in February 1st. Other guys are just moving grains. I mean, that's what's happening right now. The bean market's basis is starting to come down pretty quick, from what I understand. But that is a mouthful, but that's what's happening. And we haven't even talked about new crop. And we might have to save it to a different episode, but these are the conversations that are happening right now on old crop.
So, I mean, the other option that you didn't mention is you could move your bushels, and if you feel like it is going higher, you could look at buying a call too.
Yeah.
Right. I mean, that's another re-own it on paper.
Yeah, these are all ideas, and it's hard to apply it perfectly. The calls you're going to give up, if the basis isn't really great, and then you sell now, then you buy another 15-cent call. I mean, then the profit starts to get whittled away really quick, and that is the problem that we've had for months. Is that it's really hard to do a marketing in markets that have so thin margins and cattle guys have dealt with this for years. Like you buy a put for $5, there goes your margin, of profitability, but at the same time, you don't want to go out of business. So, you buy a break even put, or you just cattle industry struggle with these decisions for years. Kind of new for the grain guy. We've been elevated to more profitable levels. And this year one decision is the difference between profit or not profit. And what's even more punishing is the call guys are losing money. The put guys are losing money. The long futures guys are losing money. The short futures guys are losing money unless you're in the rhythm of the market. And the rhythm of the market is extremely erratic and short term. Go look at the corn chart. Go look at the bean chart. There's very few smooth moves where it's easy to capture gains any direction. It's a meat grinder, and that's just the market that we have. And it's important to recognize that's what we have. If you're going to be in it, just be ready to change your mind very quickly and take profits or get out or get short on rallies, and then look to take profits at reasonable levels. These are really unforgiving markets, although not too volatile yet, still very difficult to get in sync with and stay in sync with.
You're reminding me that there was a time approximately 5 years ago that I used to actually look at a 5-minute bean chart occasionally.
Yeah.
It's been years since I've looked at a 5-minute bean chart.
Oh, that's a fun time.
Or we might be going back there.
You should go to 1 minute.
What? No, thanks.
You can read a lot into stuff that's not actually happening with 1 minute
I
charts.
use the 1 minute line when I draw my lines on my chart.
Well, you know what I say about charts. Draw more lines and you will know where it's going.
Well, it goes back to your baseball statistics. Just pull out whatever you want.
Yeah, draw enough GAN fans, draw enough Fibonacci retracements, and then put the moon phases in there with, a mix of your custom blend, and you'll have the answer.
Yes. And then just stick with it and hope you're right.
Yeah, and then call it proprietary and charge people. No, I give the charts a hard time. It's a subjective deal. It is not black and white. So I know of a person that hand draws it on his wall. I mean, he has paper on the wall, but in giant charts, and he that's what he likes, and he is very successful trading his cycles. So everybody seems to have a different answer there. These charts are just sloppy and choppy, and wheat goes straight down every day, nearly every day, and didn't disappoint again today.
No, I read something about that too. What was the export numbers today? That beans way below expectations, corn right on expectations, wheat above. So let's sell wheat.
Yeah, we
Right.
This is a time of year where people say, and it's almost an annual deal, why does anybody plant wheat? And you'll hear that said out loud. You'll see it on Twitter. You'll see it on Facebook. And, there's guys that'll throw in rotation and other things, to justify it. And I'm sure there's a lot of good reasons, but it is that time of year where everybody just gives up on it. But that wheat attitudes do shift, and I expect it to shift. And there's a spread we're tracking, a feed spread spread that Ryan and I are watching every tick of every day. And the corn wheat, I pulled up July today, and that is the narrowest in 10 years for this time of year. That's kind of a mouthful, but it's been definitely more narrow, like meaning corn more narrow to the wheat price. But it is as narrow as it's been this time of year, for 10 years. In the July contract, May's a different animal. Where we're looking at is back in the December, because I like the short December 25 leg in corn. Because of the acres or the threat of a lot of acres. Anyways, I prefer that leg. But back there, I think it's like $1.30. It's not anywhere near the 50 cents it is in front. 55, I think, today. We're not the only ones tracking this. You see this all over online. Guys mention it. Why is it important? It's a feed spread. There's a reason why it gets wide and narrow. When it gets this narrow, why is it important? Well, it starts making it into the feed channels instead of corn, and then the corn demand will eventually go down, and then that's how that spread is going to function over time. If the corn gets too narrow, feed wheat, especially down south, and then of course wheat widen out. So attitudes will eventually shift, but yeah, wheat just can't catch a break. It just, when it starts looking good on the charts, it goes right back down to where it started from. But this is not uncommon. This is not something new that is happening this year. This is a very usual look for wheat.
Yeah, it seems like the right time to at least be watching and seeing what's coming up on those charts, and seeing there will be a shift. I mean, that's the one thing we know about markets, right? They, unless you're long, then they'll stay short forever. But they're going to change tomorrow.
Yeah.
Something's going to change.
Yeah. And that's really what I love about the business. You're bored for 2 days, or you catch up on work that isn't maybe trading, and, there's nothing to do. There's no, can't do this because the USA report's coming out in a few days. Got to wait for this. Then all of a sudden 3 or 4 things happen, like today with AI and the story out of China. And then it changes everything, the outlook. And all of a sudden there's too much to do, too many people to call, too many people to talk to. And it changes that quick. And that's why I've always loved it. You don't stay bored for very long in this business, that's for sure.
Well, let's talk about the equity markets real quick, because those could have a significant impact on the grain and cattle markets.
Yeah, and that's why we're going to talk about it. So DeepSeek is the Chinese version of AI, and you don't need to know about any of this other than they say they can do it at 1/50th of the cost of what the U.S. can do it, and all the infrastructure we're building up. All of a sudden, all that investment that was pouring in, that really was the last year in the stock market up, was due to our AI and being the lead in the world on it. And so all of a sudden, if you're an investor in that, and it looks like there might be a better opportunity or way cheaper. Of course, we don't know, and you can't trust China, but it is an open source, meaning you can look at their coding, you can look at everything. The hood is wide open for the world to see, and they say it costs way less. Now, that's the only part we don't know. You can't exactly take them at their word, but is it real, and is it better than what we have? So far, it looks like it's very competitive. So how does this tie into the grains?
Let me give you 2 things on that, because I was just talking with someone else about this. So, one, we developed, I don't want to get too far into AI, but we developed the large language models first, right? That's AI like ChatGPT that we use.
If you say so.
They can come in, and instead of needing to train their models on all the sources that the first one did, they can train their model on the AI already built. Yeah. So significantly cheaper. Now, what they have done that makes a difference is they're using far less hardware to process everything because of how they program this, and that's the open source. So that's what affects the equity market. So if you need to buy 1/50th of the computer parts to get the same result, why do we need to keep buying?
Yeah, we're too expensive.
Or build these huge server farms or whatever.
Yeah, the U.S. suddenly looks very expensive virtually overnight, and that's what's shaking up the markets. Why does it matter to the grain guys or the cattle guys? It matters a lot. This money's unfortunately tied to the funds being very long these markets. So if they're shifting money around and they're losing money in tech, they can pull money out of other markets. And I'm not saying they're going to, but this has happened in the past to make margin calls or shift money around to better allocations in this environment. It really shakes up the market. I've had a couple of conversations today, and people seem to understand the concept a little bit, but it's like pretend it's the mortgage deal where everything started falling. They had to make margin calls, and then they pulled all their money out of corn and soybeans. So it went from $8.40, I think, for corn down to $2.70, and beans followed. Beans were very bullish that year that it melted down. A lot of people forget this in 2000, going into 2009, and beans got dragged down initially, but ending stocks were very tight, and beans bounced back right away where corn never did. But that's how it ties in. The money flowing into Wall Street, and it's really been flowing into corn, soybeans, of course not wheat,
Right.
and then cattle. I mean, that goes without saying. So these markets are very long investment funds.
Yeah, and so if there is a big drop in the stock market in any of the equities, it could have a big impact on.
Yeah, just be aware that it could affect it very, very quickly. People like to think everything runs independent, and gold doesn't have anything to do with cattle, or the mortgage doesn't have anything to do with soybeans, but it does. It's all very tied together, and the market tends to move down when in doubt very, very quickly. And then of course you got the February 1st Trump tariffs. So there's many moving parts to this, lots to keep track of every day. And again, back to recognize what markets you're in. You're in highly volatile, highly unpredictable markets, and the cattle market. We even started talking about that. The very volatile and very unpredictable right now.
But this time it's different, John.
That's what I've been hearing. It's going to be different this time, and somehow we're staying up here forever. No, this is something the ranchers and the cattle guys have been working for forever to win against the Packers. Actually, the industry deserves what it got here. It made this market by not paying the producer. There's no incentive to be in business, and this is what happens a couple years later. This cycle is very powerful because they haven't even begun to retain the heifers, the cattle that make more cattle. But that did show up a little bit this cattle on feed report. So maybe it's beginning when there's this much money on the line, it attracts expansion, and I would guess that's the next phase we're going into. So you look at the USDA's numbers. Here's what's amazing about the cattle. Everyone's thinking that there's just no cattle out there. Like the feeders are very tight, but there's actually more. There's more or a very similar number than last year, and then they're 30 pounds dressed weight heavier. So these are heavier cattle coming through here with more meat, but it is the consumer demand, the retail end of this whole thing that's driving this, and those are the most powerful markets.
I did see on Twitter today somebody posted a picture of their beautiful tomahawk steak, and they said, I don't see anyone posting pictures of chicken breast. Yeah,
and I think, and we've had some conversations, it seems like this whole carnivore diet or higher protein diets that and then all the information as quickly as is exchanged on Twitter and Facebook and other forums that people are choosing beef, a higher price protein, over what they deem are lesser, taste not as good as what they want. If they have to eat protein, they want beef. Of course, you're going to find arguments on everything, and of course, I like chicken, I like beef, I like all of them. Pork, you hear a lot of guys talking about the industry leaning out the pork, so the flavor, might not be as strong without the fat. And there's a lot of theories on why this is happening, but clearly they're choosing the higher price choice in the grocery store since forever. I mean, this has really never happened this way before. When it's gotten this out of line, and it's certainly not the broilers and the chicken. You go look at the charts, and there's plenty of everything around. It's they're choosing the what they think is a better protein.
And that, I mean, going back to the equity side, that's where I would say beware. If there is a huge correction in the stock market, whatever we want to call it, not only do funds have to pull money out of markets they have other money in, but also you will see less spending by the public.
Yeah.
Which will also lead them to buying cheaper cuts of other things.
Yeah, you don't want too much of a good thing, and corn has gone through this numerous times where you're cheering that $8 or $7 price, great, but it tends to erode the demand, and it will in cattle too. And that's ultimately what will most likely end this market. Won't be the supply, it'll be the demand on this supply. So far, there's no signs of that, but that's how it always ends. And it's going to be when you're paying $30, $25, $30 at Applebee's for a hamburger. Once they change those menus, they don't ratchet them back down real fast or at all ever. So it gets to be more of a permanent change. In the grocery store, obviously that can fluctuate quite a bit, but you start really ramping stuff up, which is what's going to happen next for the cattle, the beef price that you pay in restaurants. And is the consumer going to absorb that demand, and is it going to hurt demand? Or we just really have never been in this situation.
Yeah, it bears watching. And when we talk about hedging, these are all the things that we want to keep an eye on, and all the things that can play a role in what decisions you make. You started talking about this old crop and having tough decisions coming up. I think it weighs heavily on making those decisions, but also in that same conversation, you talked about the timing and that things are moving fast now. Your opportunity, the right opportunity, might only be a short few minutes long, or a day or two, or to take a profit out of a position might be only a day or two.
Yeah, and we're going to go into the cycle where the guys that didn't hedge and just rolled the dice, they're laughing right now. They didn't put any money in any insurance, anything, and it went up. And they're going to get all of it if they sell their cattle. It'll tip back to where the hedgers are going to be the ones puffing their chest out on Twitter, and you can really see. Just go look, and you can just they're happy, and I'm happy for them. Many are my clients, but it won't be too long before the hedgers have the high ground again, and there's going to be those prices you wish you would have had, unless indeed this time it is different.
Right.
I don't know. The markets do evolve and change. But this one's running a little hot. My advice if you're thinking about hedging, check out a seasonal live cattle chart, June, or April even, but June, and then get back to me and we'll talk. I think that'll give you some of the answers that you're looking for. And if you want one, I'll send you the 5, 10, and 15 year. I can text that to you. So that's where I'm at on that, without going too far as recommendations, which we won't. I would check that out and then talk to your advisor, talk to me, and then we'll come up with a plan, because we're getting to levels where this probably needs to be looked at.
Well, and going back to choosing not to hedge, in October we were talking about how it was nearly impossible to hedge.
Yeah, looking back, thank goodness the board was so bad,
right,
that's a very popular time to put hedges on, that late summer into fall. And this year it was priced so poorly, $18 to $21 under the cash market. It made it useless. And then this thing started gaining some traction. So, it helped guys, I think.
Right. Well, hopefully they...
Not the guys that sold in fall, I guess, but...
Yeah. So, and you aren't ever going to do it perfect, right? Hindsight's 20/20.
Yeah, especially with these types of markets. Everyone has had this all figured out, of course, that we're going to shoot right up to 210. But what's funny is April's only $3 or $4 over last year's high, but very different markets. I think if you look at the cash market, this is by far the best that's ever been in feeder cattle and cattle, where last year was a great board to hedge in the summer going into late summer, because, or it might have been April going into May, because we were carrying, I think when feeders topped out last year, $18 premium to the November contract. And that was the day it topped out. So it was an excellent board to hedge with before it fell last year. Then it turned into a horrible board to use. And now we're back caught up with cash, up very close. So now it's at least a usable board for hedging too. We have been trying to catch up with cash, and now it's finally a board that you can use. We're right with reality.
Yep. Makes sense. What else do you have on your list for today, Jon?
It's a lot of stuff going on. I mean, we didn't talk about any of the Trump and Colombia stuff overnight. I mean, you got to pace yourself. You're gonna have lots of these, and you can't. You first of all, I love how I see a couple of people remember people. You want to take it slow and really get the real story. It's we've kind of been through this once. Yeah, people should actually know that. It's maybe not what the first headline says it is. I think that kind of goes without saying.
Didn't Trump write his book on how he negotiates in the 80s?
Yeah.
And it hasn't changed.
It'll be one thing if this is the first
thing.
Yeah, if this is the first time, I'd understand a little bit, but it's like the old rope-a-dope. I mean, you're going to want to wait more than 10 minutes to see what the story is before you react. So the markets opened last night negative, and then within 2-3 hours, it was a completely different story. Now, they didn't recover a whole lot, but still, just pace yourself. We're going to have a lot more of this in the days ahead. But I don't remember the last time being terrible at all. A few surprises in there, a few surprise tweets, but really, I mean, this is, again, back to recognize what market you're in. That's the market you're in and prepare for it.
Absolutely. And being aware of that is extremely important. What's going on in the markets and the surrounding markets.
Yeah, if it makes you feel any better, no one knows what's going to happen. So, I mean, you don't have to be confused by it. No one knows.
Which is why we hedge.
Yeah, and it's good to watch it on a daily basis. That's where we'll come in. You don't have to be glued to anything. Just check in, and we'll let you know the latest. But, you got to check back 10 minutes later because it's probably changed again.
Right. Speaking of which, we haven't talked about this at all, but I feel like maybe we sound a little different today. Jon and I are actually cuddling behind a little desk today instead of our usual spots because our studio is undergoing remodeling. We're actually going to have a video component to this in a couple weeks, maybe.
Yeah, for sure. The desk and everything's going to be done here. Hopefully this week we had a little setback on the personal side of stuff, but we'll spare you the details on that. So it's kind of fallen behind a little bit, but yeah, we hope to have an actual studio for all this, which we have. It'll just be organized and better. And then YouTube, we're going to have the subscription service start for the clients. That'll be free for guys that are signed up online for the podcast or the newsletter of the podcast. That's free, of course, but there will be another feature hopefully this week where if you want to hear more of me during the day, it'll be like kind of a live broker, market insights. You'll be able to sign up for that too. So a lot of big changes in the studio. I look forward to it. My knees touching your foot almost, but hey, that's fine. I found a comfy corner here.
Yeah, at least we didn't have to actually touch today. Now, when we sit behind the desk and we're on video, we might be rubbing shoulders, Jon. Plus, then people actually have to look at us, and you have to get dressed. In the summer, you actually have to wear clothes.
Yeah, shorts. That day I'll have to wear slacks.
Well, no, you'll be behind a desk.
Pants are probably still a good idea, but it'll be good. I think. Well, that's just the way everything's moving towards, or at least we are. I know there's others that do that, but anyways, that's what's happening.
Perfect. Well, while we're recording here, I just want to give you a live Dow update. We called it. It went back to 3. It's up 300 today now.
You talked me out of my short right before I came over here. It's just it's a terrible time of day to short the Dow.
Yeah, you never want to. Well, we're recording this. I'm not going to say more.
Yeah, it was, it's just personal stuff we're looking at. It's been an interesting day. NASDAQ's down a ton and the Dow's up. But we've seen these days like this before. It didn't ever used to do that, but this is common nowadays.
Yeah, happens quite frequently.
2 different directions.
Well, Jon, if people want to get a hold of you, what's the number?
218-731-1578.
Thanks, Jon.
Yep.
Hey, Jon, you know what I heard?
What?
Cattle is never stopping.
Yeah.
You don't want that lead? What do you want for a lead?
Well, I mean, it almost makes it sound like that's what we believe.
Okay. Let's do it this way then.